All right, welcome back to Investor Edge, simplifying smarter investing for everyone. Today is February 12th, Wednesday. I'm going to do a little market update on my swing trades and some positions I closed, along with just kind of a refresh of where the market's at and some news that came out today, just to kind of keep in perspective going into positions. I don't have a lot of new stuff on the radar yet. I'm going to continue to look for some stuff that's out there. Apple, Nvidia. Apple did really good today. I kind of missed an entry into what would have been an ideal setup for me. I think it still has its potential to get back into that 240 range, but I'm going to probably stay away from that for now, and I'm focused on a couple of other positions. So that being said, reminder: this is for educational purposes only. Please do not take any of this as financial advice. Markets are risky. Do not put any money into the markets that you cannot afford to lose. So let's go ahead and pull up the notes. All right, so my current swing positions, or updated to my current swings. Meta, I did sell today at 721.86 after it got back into that 725 range or 724 range. First couple hours of the morning, gave some of that back, and then it kind of popped back into it. I just sold into some shorter time frame strength. I've had it for about a week or so now. Didn't see the follow through like I wanted. It's still pressing higher highs and things like that. But I had some capital tied up in it. I was happy with a little bit of profit. It wasn't getting that consistency that I normally would like to see. But I don't think it's necessarily something bad to not look at again. I have a lot of other things going on, so I needed to reduce some of my capital. That's why a lot of my swings, you'll see I'll be talking about options going forward for the most part, just because I have capital tied up in more of my long-term stuff, and I got to keep some available for my day trading, as I've been pretty focused on that. So I can't be in a lot at once, and there's a lot out there that I'd like to be in. When I say a lot, I usually look for 2 to 3 positions. That's kind of a manageable take on everything. GE also closed that out as well yesterday, actually, at 210.56 when it was breaking, I believe, 52-week highs again. Held pretty strong into the afternoon. I don't know what it really looked like today. JP Morgan, I did purchase some calls on Monday on 210. I did sell those for a pretty nice gain today. They're out of the money calls, but a lot of them you can go check out from Monday to now. Mine were, I believe, the 280, so it's pretty out of the money. Bought some at 193, just a few, and I sold those at $3 today after it was in like the 330, 320 range for those contracts. But overall, really solid gain on that. And that's the thing about options, is when you're right, you have really good upside, and when you're wrong, you have really bad downside. So generally my approach with options is just to, I will risk the full amount that I would have been willing to risk as if I owned those shares. So you don't have to spend as much. But I would really stay away from options until you're more comfortable in the markets and you have some experience, just because there's more flexibility with just owning the actual underlying shares. Generally, it's safer because you don't have a time decay against you like you do with options. There's a lot to consider with options, so I strongly caution against that. Like I said, I'm just doing it primarily because keeping some funds available and not tied up in so many different things. And I'm looking to add more into some of my long-term stuff, which I'm going to be talking about in the next, hopefully over the weekend. I might make a video on that with some news that came out on a few things. So my new calls that I opened up today, and I'm going to tell you right now, I don't love them, but I got to stick with my plan. ANET and Shopify is bouncing off the 120 levels, continuing to put in some strength below the 120 level. It's moved sharply in the last few days, back above the 120s. Didn't have the greatest of close today, but it tends to do that. It's a growth stock. It moves a lot, and ANET sold off pretty heavily today on kind of a nothing of a news, as I would take it. It's right on a significant level, what I see is a significant level, and I went ahead and pulled the trigger on just a starting position, and I want to see how it's going to play out. Kind of a pretty early entry, so like I said, both these are a little risky. definitely there's probably safer type plays out there, but I want to stick to them and see what's going to play out, because I think ANET was a little oversold, a little reaction today, but it can move pretty hefty in both directions when it gets going. So today's market overview, inflation report came out, and I think this was part of it. There's also some earnings that was affecting ANET. CPI was slightly higher than December's at 2.9. It was at 3% for January, surpassing market expectations. In response, S&P 500 declined not by much, 0.3%. Dow was down by 0.5%, and the Q's Nasdaq was basically flat. So I think if we were going to see anything really reactionary, and this is what's going to tie into my argument for bullish optimism. I still lean in that direction, because until major things shift, all you ever hear about every day is just tech, growth. Eventually, is there going to be some heftier pullbacks? Yeah, it could start as soon as I enter into anything that's related, for sure. But you got to trade with the consistency and the flow of what's been happening. What's been happening is every time there's pullbacks in any of these types of stocks, there's usually some settling and then some consistent bounce back. So I'll consider both arguments. So I'm going to kind of lay out different things that I'm thinking about. You guys can have your own opinion, form your own between that, but just kind of consider these that play into it, right? So my bullish arguments to consider: earnings and fundamentals for Shop, especially fundamentally strong. ANET's long-term trend is still intact if it holds these key levels. Both of them are in a space that's been really moving strongly. ANET's up a ton this last year. Shopify's been killing it on earnings. A lot of good stuff coming out. With the CPI data, because that's what a lot of people will relate things to. Was it Cisco reported today, and I think that kind of ties in ANET, but ANET's up a little after hours. So not by much, but something. And again, I'm looking to just sell these contracts. I'm not looking to hold them through expiration or convert them or anything like that. So I'm just trading using the options as my leverage tool rather than shares. Nasdaq didn't collapse off CPI data. That usually, if you see people really panicking about this inflationary data, you'll see growth stocks kind of get hit immediately, because they're so involved, or they're so dependent on rate sensitive type markets. People start to panic when they see that. But overall, if the Fed stays patient, doesn't aggressively push back on rate cut, I think growth stocks are going to be doing what they've been doing, and that's been consistently moving higher, or trading within a big range, but bouncing back strongly. Tech is still dominating. Like I said, I kind of mentioned that. I don't think the theme has really changed too much. Now, my bearish arguments. If these begin to lose these support levels, this isn't just a dip, it's a breakdown. We could be well in the start of it. Who knows, right? You got to see what happens. I kind of jumped in pretty early. Sector rotation. If money flows out into defensive sectors, meaning institutions aren't confident in tech for now, or if Fed comments, talks tough on inflation, growth stocks can take another hit for sure. So, kind of keep that in mind looking at this stuff. I'm playing purely technicals, and I'm playing off of short term what's been going on, and a little bit of how the market reacted today. It was pretty flat. So I would look at that as nothing really to consider either way. I'll pull this up on the charts, but basically my positions, I bought them at the lows, or the calls at the lows when the markets were selling into these levels I was looking at, because they get options move quickly, and they move in multiples basically of the underlying stock. So when the stock was selling off, the options contracts were plummeting, right? Especially for calls. So I definitely was able to get some pretty cheap ones. Obviously, we'll see how they work out. But as it got down to those support levels, so basically, if it gets down to 106, 107, if there's any value left in those contracts that I have, they should have some value left in them, even if they got down to those levels. I'll probably be, that's where I'd be looking to close. I'm giving it kind of that risk, and then Shop. I want to continue to see if it's bouncing. It's moved pretty aggressively off the 118, 119 into the 120s, Ultimately I want to see it stay above 114, 115. I'll give it a little bit more room over the next day or two. Again, these are time frames I'm looking to hold through maybe a handful of days, not necessarily multiple weeks. So what I'm watching for, if I see more stocks starting to break down, definitely going to be cautious. Probably be getting out of some things if I see anything crazy happen. Fed commentary, if Powell signals a hawkish stance, growth stocks could definitely face some pressure. Overall, though, I liked, APP and, a lot of the other, and although they're not same industry, right, but, same tech sector, really strong after hours today. So I like that going into for some of this growth stuff. They kind of play off of each other a little bit, but we can compare that. It's not identical, obviously, but it helps investors put their mind at ease. And ultimately, what I'm looking for is, where is the institution buying? I'm hoping they're buying at these levels that I'm looking at. And I've seen it work out before, but it could fail. So we'll find out. Sector rotation, we kind of talked about that. And my final take, bullish bias justified unless these key levels break. And, the market has proven ability to recover from pullbacks. And until that changes, I'm not going to change my approach. Broad market's pretty strong. There was some selling pressure a little bit in ANET because there were some articles that came out about the insiders selling. We've seen that get bought up a lot. I think it's scare some people out, but ultimately it's going to be based on technical levels, or it's going to be based on price action, and it's going to be based on where people are buying at. So as you can see, after hours, made a good little recovery. So I think there were some comments, some tune, because Cisco CSCO reported. So ultimately, what was I looking at, right? You can see this beginning of the month anchored VWAP, which played as a pretty significant level as it began this recovery back from the significant gap down from the 128s, into the 118s. It gapped down and then it just got flushed. But you can see that red line was the initial beginning. These are 2-hour time frames of where it kind of got into that level, hung around, tried to sell through, recovered, and then we began the grind higher, right? And ultimately getting back, near that level in the following week, consolidating, starting to press higher. And we put into those highs of that 118 level. And then we had like I said, pretty significant gap down and sell off yesterday. A lot of volume today, enforcing that. So we're kind of in a make or break type area. If I didn't love the close, I like the after hours, a little bit of a bounce going on, or it could just be pulling in buyers. Ultimately, what am I looking for? I'm looking to hopefully get back into this 114 plus area. My contracts will definitely be worth more than what they are. I'll probably begin to close out a little bit of them and hold the remainder for continued upside. Ultimately, looking, if it gets back above that in the next day or two, or even if it just stays within this 109 to 113 range, I'll continue to hold until I see it. Also, where was it? Yeah, it was that other week. It was kind of that. What it looks like to me is we could be putting in a retest of that, of over here, right? So a few things in line. Ultimately, I'm strictly focused on anchored VWAP, RSI. We entered the oversold territory quickly. Standard. I didn't change any settings on this 14 period. What I want to see is that get back into the 50 range where it's kind of even, right? Buyers, sellers, people look at overbought, oversold. It just kind of determines who's, in kind of a control scenario. As you can see, when it's above 50, it's generally moving higher. When it's below 50, it's generally moving lower. It doesn't mean that if it goes down to 30, it bounces immediately. That's not true at all. But it coinciding with what I see as a potential bounce level for support. Now, did it get there in a rapid pace? It did. I don't like that it got there by dropping 6% today. But again, we're talking growth stock. So you have to, know what you're... I'm going to change this song real quick. You have to kind of know what you're working with here, right? This is a stock that can move, right? It can move in both directions. So I don't know. I think it's pretty key level. We could see continued downside for sure. I don't see an argument for that. Am I an aggressive on my entry? Absolutely. I think if you see this play out a little bit longer, get back above this week. This white line is this week's anchored VWAP from the beginning of the week. If we get back above that and consolidate sideways going into next week, and then volume starts to follow through, that's a complete argument for continued upside, and you should definitely be buying. But there's different ways to look at it, right? It's all the same thing. Mine's just a pretty early point, early entry. But stock has to do what it's going to do, and we're going to find out. So, moving over to Shopify, as you can see, that 114, 115 range is kind of my end-all, be-all. If we get back down to that and we don't move off, I'll probably be closing out any intrinsic value that is left in those contracts, which again, there should be, based on what I've seen before, I'll probably lose 40 to 50% if it gets down into there. Which is fine, but options move quick, and I'm looking to make 70+%, maybe 100, if it goes in the favor that I want. If we get into that 125s, back into that 125s is ultimately what I'm shooting for. Got up to 122.61. I didn't love that sell-off, but it did that yesterday too. After this, I talked about it yesterday in one of the videos or Patreon, I believe. Again, it's tech stock, it's growth. Even though fundamentally it's been really strong, it moves, right? And it moves in both directions. What I love is we have last week's anchored volume weighted average price has crossed above prior week's anchored volume weighted average price, and this week is maintaining that level above, and the stock is continuously, every time it gets far away from it, continuously getting back to it and kind of closing in the range of it, right? So until I start to see that break down below, that bottom area doesn't scare me. That could be a huge argument for support. A lot of people stepping in to buy anytime it's crossing to the 118s. Until I see something close down there on a daily or longer time frame, I don't think there's a reason to get out of it yet. Ultimately, I think I think 125 should be retested. It got there so fast and so on such a volatile day. And it's 52-week highs. I think it's all-time highs. So I think we're going to get there quicker than we're going to get below like the 114 level in the short term. But we got to see it stabilize. It's still a little choppy. I think the dust kind of settled down today a little bit, not as big of a range as the day prior. I would ideally like to see it stay within yesterday's range and then slowly but surely start to move that, start to grind higher like it did previously, right? We kind of see big gap up, sideways move, kind of stays within the range, grinds higher. Obviously it sold off a little bit, prior to earnings and things like that, but kind of a little bit more, strong move in that direction, hopefully, favoring the long side. So that being said, again, I'm watching Nvidia. I'll show you my JP Morgan one that I traded with the options. That's kind of similar. Nvidia, little extended for my taking, kind of consolidating. Like I said, I put a lot of weight on anchored VWAPs and a combination of RSI. As you can see, we're kind of hanging around that 50 level. That tells you there's kind of indecision. Are we going up? Are we going down? What's going to happen? With strong volume, volume's kind of been fading these last couple days, right? You can kind of see it this day. Look at the opening and look towards the end of the day, but look at overall, you can do a quick summary in your head. Volume's kind of fading, although stock price is holding up. That tells me consolidation. I think we get a little bit more downside pressure unless this anchored VWAP from prior week moves up, faster or at a better pace, or if volume gets really significant on an opening one of these mornings, and then we make that bigger move back into. Ultimately, I do think we're going to see 140s sooner than later. It's just a matter of what is that setup going to look like. I would look to probably buy calls or starting positions at a retest of the 127s, 126s, ideally the 125. It just depends on where these two are going to meet. But that's kind of what I look at, right? Is it going to get there? Who knows? But sometimes it works, sometimes it doesn't. You got to have your own take on everything. So JP Morgan, kind of similar to ANET, right? JP Morgan's been really strong, one of the strongest stocks. It broke two 52-week highs, got hammered down. It was down 3 or 4%. Got into those key levels that I look at based on my metrics, and I was buying calls in this area on 210, on this day. I'm not afraid of that downside move. And what do we get? Over there, I sold them yesterday or today. Did I sell them today? I don't remember. But either way, I think I sold them today. Yeah, because when stocks started to get fluttery, calls they went up like 30% or so yesterday, and I don't know, whatever it was. I've been in a lot of stuff. But as you can see, so I'm playing off that level, reclaim that, I'm selling into that strength. So when I'm doing it with calls and not necessarily with just underlying stock, I'm doing it at a quicker pace because, again, just how options are structured. They move rapidly in one direction when the stock is moving a lot. So by this time, they were already elevated by 40, 50%, potentially missing out on some of those gains. That's why I'm a little bit more aggressive when it comes to options side of things, and I really try to find bottoms, which is really tough, can be really tough to do, right? It's bottoms and tops. Guessing bottoms and tops is one of the hardest things to do. But ultimately, it's not really guessing a bottom. I'm just looking at short-term support. If that support fails, then I get out. So simple as that. All right. Well, I appreciate any feedbacks. Thank you for watching my videos. If you have any comments, or even if you disagree, I would love to hear your take on some stuff. Get various opinions. If you want to know anything else or would like me to look at a stock specifically that you're interested in, I would love to. And let's go from there. So have a good one.